Hey guys, TommyBryson here, and the stock market is officially broken. It's down, it's crashing, things are not looking good. And overall, this is how I know when things are actually super bad because my portfolio is super conservative to the point where when I lose money, naturally, almost every single person I know is sweating because they're probably losing a lot more than I am. And right now, for the first time since 2020, I am officially down in my overall portfolio, meaning I'm officially losing money. And as you guys remember, 2020 was when the whole thing started. You guys remember 2020? So now for me to be basically losing money a whole 2 years later right now, it either creates one of two things: an opportunity or a little warning to be extra careful with your investments. So in this video, I'm going to tell you exactly, should you be holding your investments? Should you be continuing to invest money? Or should you take advantage and sell off some of your investments right now? You know, for the sake of not losing more money, for the sake of saving money on taxes and whatever it actually is. Now, as always, guys, like this video. On top of that, also subscribe and hit the bell so you get notified. Now, the very first thing, guys, is I don't want to have people waste time. So if you're watching this video right now and you are a speculator, meaning, for example, you bought a stock or you invested some money, you didn't know what you were doing, you made some money, but now it's going down, and you're wondering, do I sell, do I hold? The answer is, you gotta look at yourself in the mirror and understand that the only reason like the long-term team and I, basically people that follow this channel, are confident in our investments because basically we fully understand what we are invested into. As far as, for example, index funds and so on, all right? But if you invested into an individual company, whether it's, for example, like a cryptocurrency or an individual stock that nobody knows, but you got a little tip on, okay? And now it's basically crashing and you're wondering, do I sell or do I not sell? The answer is, you gotta know what's best for you, and you gotta know what's gonna make you sleep better at night. So that's why it's so important you comprehend your investments. Because if I tell you sell, 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 but then the market recovers like it usually does from every single correction it's been through, the answer is then you're probably gonna be upset later on. But my whole thing is, whenever you speculate, don't speculate with more than 10% of your money. That way, you aren't gonna go broke if things don't work out, okay? And if it does work out, great, but if it doesn't, you're not broke. So that's a very important factor. However, if you're wondering right now, Tommy, well, that's not my case. I know what I'm invested into. I have some index funds in here. I'm investing for retirement. I have my Roth IRA, my 401k, but it's all down. What exactly am I supposed to be doing right now? Holding, investing, or selling? The answer is simple. When it comes to investing, corrections and down markets, recessions, depressions are as common as winters, as common as, for example, sometimes we get blizzards, sometimes we get, for example, snowstorms. These things are very common. You know, there's been a bunch of corrections. There's been a bunch of potential recessions, okay? And every single time, the market has recovered. Now, let me tell you what it means the market does not recover. It probably means that your money and my money doesn't matter at that point, and none of this matters anyways. So the idea of I'm gonna take my money out that I wanna have in here for the long term because right now the market is down is a terrible idea. And you don't wanna do that because history shows you're going to lose out on a lot of potential gains. Now, that's one part to that answer. But the second part to why I answer this answer like this, or this question like this, because basically, remember, when we're investing into index funds and for retirement and all this stuff, and we say, hey, invest 10% or 20% of your income every time you get paid month by month by month by month, it's not because we want you to invest when the market is high, but it's because we want you to invest especially when the market is low. Because this way it averages things out and you get to buy at a steep discount. And whenever you're investing very conservatively, the odds that you're actually gonna have opportunities to basically capture a lot of gains all of a sudden are very few. So whenever you have a down market, it's the perfect time to go ahead and invest some money. Now, my rule is always this. If I have extra cash that's not going to be used for anything else, and for example, the market is down and I'm actually losing money by 10-15% on my conservative portfolio, I might go ahead and say, hey, instead of investing that 20% I usually do, I'm going to add an extra 5 or 10% in there and trickle that money in there just to take advantage and make some more gains. I did this in 2020, and between a month or two, I invested around $20,000 into the market. And that basically made me have a lot more money today, because when I bought back then, the market was at the lowest point. That was luck, by the way. I was trickling in. So anyways, I would have captured the bottom, or I wouldn't have, but I was going to capture some bottom somewhere because I was trickling the money in. So that's the idea, all right? But however, if you're wondering, well, Tommy, when do I sell? The answer is, if you're in it for the long term, you don't want to sell. However, though, if you have problems when it comes to considering, hey, Tommy, but what about taxes here? You know, right now my stocks are basically down. And right now, by the way, this is also something I'm facing. You know, for the first time in a long time, and by the way, let me go ahead and show you my portfolio so you guys know exactly what's going on with it. So right now, as you guys can see, I'm actually down by around 1.51%, but every single investment except VOO is basically losing me money. And year to date, my entire portfolio is down a whopping 16.35%, which basically creates a huge opportunity for me to go ahead and buy some more. Now, let me tell you something, Tommy. So this doesn't mean exactly that you're going to be going ahead and investing more money. The answer is it depends, because this is why I say personal finance is personal. Right now, I'm saving up some money for some opportunities. So that's one side of the token. But on the other side, I'm also telling you guys this one thing. My portfolio is very conservative, especially for my age personally. So what I'm planning to do is grab all my investments and basically consolidate them just into the S&P 500 index. So by doing this logically, I'm going to have a reflection of a massive loss on my entire actual losses when it comes to my investments. Now, whatever I lose here, I can basically carry on or just basically write off the next well, it's gonna be like $3,000 write off for the next it's gonna be like $20,000 in losses for a long time. But it has to make sense, and I don't want to do it just by doing it. So today I have a conversation to have with my accountant so we can actually make everything make a lot more sense. But overall, it depends. The market corrects all the time. These times are normal. It creates buying opportunities. So overall, if you don't know what you're invested into, you probably, if I didn't know what I was invested into, I probably would be selling, okay? That's me personally, because I don't like gambling. If I know what I'm investing into, right now I'm continuing to invest the same amount of money or even more to take advantage of the opportunity. If I have issues when it comes to taxes and this created a very good opportunity, then I'll probably potentially sell some of it, so then that way I can basically go ahead and, you know, save some money in taxes and so on. But overall, guys, to understand what's going on right now, you just have to know a few things. The Fed is being ultra aggressive when it comes to interest rates. And whenever they're ultra aggressive with interest rates, usually money in the economy tends to tighten up. And whenever money in the economy tends to tighten up, people start to not spend that much money, which usually causes companies to actually go down as far as, for example, earnings. Companies make less money. And these companies are the stocks you're talking about. And these stocks tend to go down. Thus, markets tend to go down. Now, they tend to reflect this a lot faster than it actually carries out in the economy, because me and you are able to predict these things and basically buy and sell right away, like a lot of folks basically do. Now, eventually, when the Fed slows down inflation to what they want to slow it down to, and I think I read statistics that show that basically they're trying to slow it down and have interest rates go up for the next 2-3 years to potentially lower inflation back down to 2-3% like they had it before. But it's gonna take a while. So in this while, we might see the market stay like this for a while. So that's why I say don't grab all your money at once and dump it at once, because we don't know exactly where the bottom is, okay? It's a terrible idea to do. So if I have extra money that I want to invest, I would probably start trickling it in a little by little by little by little. And if I see, for example, any changes or any announcements, then probably I can take some action to say, hey, before things change so much and drastically, I'll probably dump a little more money in there just to take advantage of the situation. But overall, guys, that is the answer. Remember, when it comes to investing, there's always going to be ups and downs. It's a part of the game. And volatility, which basically means a stock going up and down, doesn't make it any more risky. It just means it's basically just changing. But over time, if you're investing into indexes, and the overall idea is, if you're investing into the S&P 500 fund right now and it's down 10, 20, 30%, the answer is it's down. But the only way this thing goes to zero if it's the whole economy crashes. And by that point, the whole world crashes, because a lot of countries are dependent on us too. So it's kind of at that point, nothing really matters, all right? So it's just a reaction to something the Fed is doing, which is to be expected, because they've also said it's to be expected. So nothing to worry about, okay? I'll see you guys next time. Thanks for watching. As always, like, subscribe, hit the bell so you're notified. And I hope this video gave you some understanding, and it actually calmed me down. So when you go online and you hear all these articles, just remember, this is a part of playing the game. Another video up here. My face is up here. Follow me on Instagram, TommyBryson. And as always, long-term team officially out.